Very good morning to you all. Hope you're doing well. You're having a nice weekend. I decided to do the bulletin a little bit earlier than normal. We kind of normally do it in the evenings, but the thing is with Sunday is that it's taken data from Friday, so it doesn't really matter what time on Sunday it's done, just as long as it's done. So we can do it in the evening or we can do it in the morning. It doesn't really matter. We are in a state of euphoria, and because we're green up here, I can't envisage any big declines because the sentiment's very much green. However, if that was like really strongly red, we could have a little bit of a heavy decline. Conversely, alternatively, we could probably have a little bit of a breather with risk appetite, but we've seen the herd, they've really sold into the close. So it's unlikely they're going to get paid. They probably sold because of the power speech that we're going to get today. It probably was from something like that. So we've got strong technical, very strong sentiment. There's 28 people selling the market, selling the indices versus the one person buying. So there's a load of bears left. The short Aussie and the short New Zealand dollar, the long yen and dollar, the long CAD and Swiss. VIX got dumped. Okay, EG and GU were the notable movers. They'd also sold S&P 500, the US 30, and they'd sold oil. Okay, so this is now fine because what had happened is that the website had been taken down and now it's back up. So we've got the market structure summary. Now what we want to try and do is match the QDB score with the market structure summary. This takes into account COT data, inflation, GDP, unemployment, load of fundamental metrics in this one column. This is just purely sentiment and technical. Okay, so if we get the two to align, it should be pretty good. And note that there are a lot of pairs that are ranging, so be careful. Perhaps avoid the ones that are ranging, just to be on the safe side. It's worth noting as well, if spotted in Discord, is that the NJ is maximum skew, right? So that's going to be incredibly interesting Monday, Tuesday. Okay, so there's nobody long this particular currency pair, but everyone is short. Okay, likewise, be careful of dollar Swiss and dollar CAD because we're incredibly skewed on those two as well, and a big skew on pound Swiss as well. So, and Aussie CAD. See, what's going on right now is that the herd are hodling. They're holding, and so it's creating a skew. We don't normally ever see such skew across the board. Okay, normally like one pair, or a couple, but not multiple. And even so, here we've got a bit of skew on EN as well. So that's quite skewed. So that's that. So let's talk about the indices and gold. So come up to here and see what happened is that possible buy incoming. That I was saying they probably are going to sell it, and we had they had sold it, and up we go. So that's that. So that's how you can use the FXCM train station to get trade ideas. So ideally, in an ideal world, is that when they start going one way, they continue to go that way. They can't flip flop because if they do, it's hard to project. So if they don't and then actually go one particular way, which is what they did, then it's okay. We can make some good profits. So what you're looking for is the MA and then the SSI, and then they're going to cross. Okay, that's the setup. That's a QDB entry and exit. So you're waiting for the crossover, and then you're putting your stop below the swing low. So that would have been probably a 2R trade there, 2.5R. But you absolutely must know where your exit is. You could have had it here, or you could have had it here. Now the thing is, these are going to be wide stops, so you want to reduce your size. Okay, you wouldn't want to like have a normal size with a $30 stop loss. It would be too painful and scary as well, because it could have come down to take your stop, but it'd be a big chunk off your portfolio. And so you've got to be careful. Know your exits, know your size. You have to be happy with face the fact that you might get stopped out. So if you're happy, or so I say not unhappy, to be stopped out at say £50 or $50, that's okay. But if the $500 is going to sting and it will freak you out if you lose it, don't have that size. Okay, massively reduce your size. Okay, so for me, I wouldn't want a £500 stop loss. It'd just be too stressful. I'd much rather have a £50 stop loss than a 500. So it's all to do with your risk parameters and how much you want to risk. So £50 for me would be okay, because then I could get like 200, £150 TP. That's a good risk to reward, right? But I wouldn't want a big, massive stop loss. It's all a case of knowing when your exit is and knowing your size. Oil is, you can see it's, we're red, we are sell. However, we can potentially have made this flag. I'm not entirely sure whether or not that pole needs to be longer, but we've had a channel break and they'd sold quite heavily on Friday. And so up we go. And then this could well be the bottom here, potentially as well. So that's oil. Let's look at DAX. We're going to have a sandwich, is that they'd gone long, so price fell, and then they'd sold. So we should be above this box. We might ping pong between the two punishment boxes. Here's 30. And this is Friday. And I think this is due to the Powell speech. I think they just didn't like the idea of going long when we had that speech on the weekend, which is unusual in itself, but I think 40k is quite doable. And obviously we had initial stops at 40,000, a decent reaction from it, and unfortunately they'd sold at the high. They got paid a little bit, so fair play to them, but they've held on short, and then they added short quite strongly here, and up we go. So I think 40k is going to be like a new normal, and very much like the S&P, being above 5,000, that's like a new normal now. So it'll take quite a lot for it to breach 5,000. It looked like we were going to do it a couple of weeks ago, but we just teetered on that level, and we pumped higher. And so this is just some sideways chop, a possible stop run. You can see here the break of structure, and it would have probably induced a lot of shorts, which we can see it did, and they got caught out, and rather than exit with a small loss, they're going to hold. They always want to hold so they don't get stopped out, but the thing is, the small loss is going to mean medium-sized or large loss. So they started to really sell here, for example. This is a CPI move, I think that might have been CPI, I can't quite remember. We see a data release there, and they started selling there. Oh, it's cruel, isn't it? And up we go, and we haven't looked back since. So it's possible 5,000 is going to be a new normal, and 40,000 is going to be like the new normal on the Dow Jones. So that's that covered, and then that's it really. So the robot is going okay. We've got two testing side by side. We've got a passive bot that uses the Twitter API algo, and we've got an aggressive bot. The aggressive bot has not been performing well last week, so I think I'm going to make some changes. And I think what I might do, if we come to the rate of change, we had a big signal on the pound Swiss, and that performed really well. So I think what I might do is incorporate the rate of change into the aggressive bot and see how that performs, because this should be quite good, because it treats every pair the same, but it just looks at the acceleration or deceleration on the sentiment. For example, the pound Swiss really accelerated on its selling, and because of that it pumped. So we can certainly look at the rate of change. I'm probably going to do this, maybe give the aggressive bot one more week, but it's undergoing a lot of drawdown and it's a little bit too YOLO. So I think we need to calm it down a little bit on the aggressive testing and maybe look at the rate of change. So I think maybe one more week and see if we can recoup those losses. We had a pretty horrible day one day last week. I think it was to do with some data that we had on Thursday, and it just encountered like a big loss because it accumulated a lot of the positions and got stopped out. So I think maybe we'll give it one more week And if that doesn't pan out, which I've got a feeling that it might not, we can look at the rate of change and see how this goes. So it has got a good concept, but we're just looking at acceleration. So it should be quite good. That's today's bulletin video. I'm going to need to do the COP data video now, but it'll just be a short one, like 5-10 minutes long. So have a great day. I'll speak to you guys soon.